There are always conversations about how the government is borrowing, but at times it might make sense to ask yourself, how can I benefit from these borrowings? So it is good to understand how the government comes to the market to actually borrow. So today, I would like us to discuss about Treasury bills. Treasury bills are short-term lending to the government. So the government comes to the market and borrows on a short-term basis. There are three types of Treasury bills based on the tenor. One of them is the 91-day Treasury bill. The other one is a 182-day Treasury bill, and then the 364-day Treasury bill. What they mean is that once you lend to the government, they will pay you back your money in 91 days or 182 days or 364 days. So that is basically what it is, lending to the government with a specific tenor. How they operate is such that every week the government or through its agent, the Central Bank of Kenya, tenders or comes for a specific issue. So every week you can always be able to bid and get the Treasury bills. How then do you determine what is the return? You can actually check what is going on in the market and bid close to that. So that is how basically that works. And how do you know the kind of return you're going to get? The returns are known in advance. There is two ways. You can actually decide that I don't want to bid or quote a certain rate, and so you'll go with what is called market determined. So that is a non-competitive bid. You can do that up to a maximum of 20 million. Anything less than, more than that, you have to give a specific rate. So you say that I'm going to give this money to the government for 1 year at 10%. So the main question is, why should I even consider investing in Treasury bills? The main reason is really you are giving money to the government, and it's one of the most riskless assets that you can invest in. Treasury bills are, and we actually call it the risk-free rate. The rate that you're getting from a Treasury bill is considered the less risk that you can invest in. So you can consider investing in that, in Treasury bills, lending money to the government. If you want to invest 100,000 shillings and you want to buy it at 10%, and it is for 1 year, so your what is called a nominal amount, you'll be investing 100,000, and from that 100,000, you'll only pay 10,000. So it is issued at a discount. So you look at the present value of what is going to be at the end, so that becomes your nominal amount or what you quote, but what you pay is less the discounted or the return that you're going to make, such that on maturity, you are actually going to get the 100%. So you give the government less the interest that you're going to earn upfront, and then you get that at the end of it all. So that is what is called discounting. So when we're thinking about investing in Treasury bills, how then is the process? The process is very simple. You have to open a CDC account through the central bank. And that has been made very easy through a mobile application that is called the DAO. So you can just download it, and then after you download it, you fill in all the documents that are required. And the documents that are required to do that would include your ID, it would include your KRA, and very simple to open. Then your bank account, you need to have your bank account, because once you bid and you're successful, you say, I want to lend to the government, and they say, yes, you can lend to us. They'll actually just debit your account. On maturity, the same thing will happen. 91 days have ended, you'll just find the money into your account. So that is also a very easy way to get it. So what are the key mistakes while investing in Treasury bills? Because yes, we have said it's less risky, but what are some of the mistakes? The biggest number one mistake is investing your money and you might need it in between. So there is no way you can get your money back. So you have to wait until maturity. The worst case scenario, if you must get that, you go to the central bank for them to discount. If they discount for you the Treasury bill, it will cost you a lot. You could actually lose some of your principal. So it is good to use this for your specific goals. I want to pay school fees in 3 months. That is the money I'm going to use. I know for sure that money is going to come and I'll be earning a return. So I need to make sure that that works completely. So that is one of the biggest mistakes really when it comes to investing in Treasury bills. So again, we continue to discuss these things about investments, taking a step at a time for us to understand and demystify investments. So Treasury bill is a good option for you, which you can also use it. You can actually use it if you're taking a loan as a security if you need it. So all in all, we continue discussing and learning more together. Thank you.
Learn, grow, prosper with Zurit.